friends, Zach Blount here with Omega Real Estate, and today I wanted to give you guys a market update, what's going on in the market, what changes are happening, and what could happen in the future. I want to start out by saying a lot of people are giving their predictions, and the truthful answer is no one really knows what's going to happen. However, we can examine the data and look at the past and see how that's going to affect it and look at things going on right now. And that's what I want to start with, the real estate market right now, what's going on with it. So first, there are less buyers and there's less sellers on the market. However, transactions are still happening and purchase prices haven't gone down yet. We put a house on the market last Friday, and as of Monday, we had 3 offers on the table and it still sold for over asking price. So yes, the market slowed down. However, things are still happening. Prices haven't changed as of yet. Now where the market's going, I want us to take a look back at 2006. So 2006, a lot of people are trying to compare it to 2006. Oh, the housing market, we're gonna see home prices decrease by 50, 75%. I'll be able to pick up that dream home of mine for $200,000. It's not gonna happen. In 2006, home prices were inflated. They were overvalued. And I wanna give a number, bring a number to your attention of how we actually determine whether homes are overvalued, undervalued, if they're inflated or not. And that is by taking the annual rent from a property. So if the property is renting at $2,000 a month, that's $24,000 a year. And the sale price of that property, let's say $400,000, and we divide $400,000 by that $24,000, and we come up with a figure. Now, over the last 40 years, that average figure has been 15.8. So a multiplier of 15.8. In 2006, it was at a multiplier of 22 to 23 times. So yes, home prices were inflated. Now, as of February this year, it was at a 16.7. So not much higher than the average over the last 40 years. Yes, it was a little bit higher. However, interest rates were a lot lower than normal, so it made up for that 1 point difference. Okay, where the market is going, that's going to be determined by a couple of factors. First is going to be your unemployment rate. So if this only lasts for, let's say, another 4 weeks, 6 weeks, and things go back to normal, people get back to work, some people might be permanently out of work, at least for that time due to business shutdown, but majority of people get back into things, then what it's gonna be like is, imagine driving on the freeway and there's a horrific car accident, everyone comes to a slow, you see those brake lights start coming, you sit through it for a while, as you're passing it, you're just, thanking God that you weren't involved and that you're all right. But as soon as you get past it, what happens? Everyone puts their pedal to their metal and they are flying down the freeway. Now, if unemployment doesn't spike too much, people get back to work, that's what it's gonna be like. There's gonna be a slight halt, things are gonna slow down. You might see a couple, opportunities to buy a house, but things are just gonna jet right back to normal and even go faster than they were before. However, if unemployment rises higher than predicted, people don't get back to work, those businesses don't reopen, then what's gonna happen is people won't be able to make mortgage payments. The banks are gonna foreclose on those houses. And yes, you might have some opportunity to get a discount on that house compared to what it would be selling for today. So my question for you guys is, are you ready if that were to happen? Maybe it does happen, maybe it doesn't. But if it does happen, are you ready to capitalize on that? A lot of people talk about, waiting for the right opportunity to buy a house, but seldom are they actually ready for when that comes. So what I recommend for you guys doing is, if you're waiting for home prices to potentially come down, hoping that they are, then you want to do 2 things. First off, you want to save money when you can. I know that's hard right now if you're not working, but when you get back to work, if you are working, save as much money as you can. Second, work on your credit rating. So get your credit score up. The higher your credit score, the lower your interest rate's gonna be, and also the lower your insurance cost is gonna be on that loan, which could save you a couple $100 a month. So if you're trying to figure out how you can get ready, those are the 2 things you wanna do. If you need tips, how to make that happen, things that you can do, let me know, always happy to help. Give me a call, hope to talk to you guys soon, and thanks for listening.